morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 26th of April. Today in the US, the big event will be an announcement from President Trump regarding his highly anticipated tax plan. Given that investors have been waiting for details on that plan for months, any specifics that are more or less in line with what Trump pledged during his campaign may result in a fresh round of gains in the dollar and the US equities. Having said that, we think that this is a low probability scenario. The US administration recently said that it will prioritize reducing taxes even if that means increasing the nation's deficit, which comes in sharp contrast with what Trump pledged pre-election, namely that his tax cuts would not add to the US debt. A plan that widens the nation's deficit may encounter massive opposition from both Republican fiscal hawks as well as Democratic lawmakers. Therefore, we believe that if this is what we get today, the market may start worrying that such a plan may not be approved by Congress at all. There is also the case that we don't get any specifics, but only a general announcement regarding what the President wants to get done without any real numbers. In such a case, the market reaction may be limited or even negative if the lack of clarity disappoints market participants once again. Euro-dollar edged north yesterday, breaking above the resistance, now turned into support of 109.10. The advance was stopped near the 109.55 barrier. Disappointment from Trump today may encourage the bulls to push the rate above that line and perhaps aim for the psychological round figure of 110. Nevertheless, we see the likelihood for a corrective setback before the next positive leg. We base that on our short-term momentum indicators. The RSI has stopped within its overbought territory and could fall below 70 soon, while the MACD, although above both its zero and trigger lines, shows signs of topping as well. Talking about the euro, the common currency jumped yesterday following a Reuters report that the ECB is likely to remove some of the references regarding downside risks from its economic assessment and may even get rid of the forward guidance for further easing. With regards to the timing, the report said that there is little appetite to do so when the officials meet tomorrow, indicating instead that the June policy meeting appears much more likely. In our view, the ECB is indeed very unlikely to change tone tomorrow. The recent concerns of the officials with regards to a surge in Eurozone's bond yields due to the French election, combined with the slowdown in the core CPI for March, suggest that the bank could stay patient for now and wait until at least the June gathering to communicate a more upbeat bias. By that time, political risks may have dissipated and the bloc's core CPI may have picked up steam again. As for the euro, although we could see a modest pullback tomorrow if Draghi maintains a cautious tone, we would treat any such reaction as a corrective move of the currency's short-term upside path. Euro-yen surged from near the 119 zone to hit resistance near 121, near the 121.80 hurdle. In case of a retreat tomorrow, we expect the bulls to regain control and aim for another test near 121.80 and the longer-term downside resistance line drawn from the peak of the 15th of December. However, a clear close above that line is needed to signal larger upside extensions. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.